Hey everyone, thinking about retirement investing? It's all about building a mix of assets, right? You want something that balances risk and stability. Traditionally, that often meant stuff like gold. Gold's always been popular because it's seen as stable and reliable. But now, there's this newer player called Bitcoin, often nicknamed digital gold, and it's gaining a lot of attention. So, the big question lots of people are asking is, should Bitcoin be part of your retirement savings plan? To figure that out, let's put Bitcoin and gold head to head and compare their key features. Let's talk gold. For literally thousands of years, gold has been seen as a way to store value. Through wars, economic downturns, and inflation, it's generally held on to its purchasing power. Gold's price usually moves pretty gradually, making it relatively predictable. In 2024, gold actually saw a nice bump, increasing nearly 30% and hitting a new all-time high. Now on to Bitcoin. Bitcoin is known for its wild price swings, its volatility. While the overall trend long-term has been upwards, it experiences some major ups and downs in the short term. Even though Bitcoin absolutely crushed gold's performance in 2024 with a massive 120% increase, its history of crazy volatility really underlines how risky it can be. What about turning them back into cash, liquidity? Both are actually pretty easy to sell. You can trade physical gold ETFs, exchange-traded funds, kind of like stocks that track gold, and futures contracts all over the world. It's a very established. Bitcoin's liquidity got a big boost in 2024 when Bitcoin ETFs were approved. This made it easier for people to invest through regulated financial products. However, Bitcoin still faces risks, like crypto exchanges going bust, getting hacked, or sudden liquidity crises where it's hard to sell quickly without the price dropping. How do they handle inflation? Gold has long been seen as a shield against inflation. It often holds its value when the economy gets shaky. Even central banks hold gold as a safe haven asset. Bitcoin, because there's a limited supply, only 21 million ever, is theoretically resistant to inflation. But because it's so new and volatile, it just doesn't have the same trustworthy track record as gold in this area. So what's the verdict? Based on everything we've talked about, gold seems like the safer choice. It has a long history of stability, it's widely accepted, and it's pretty safe from technological threats. Bitcoin, while offering potentially higher growth, comes with a lot more risk. It doesn't have intrinsic value. You can't make jewelry out of it. There's still uncertainty about regulations, and future tech like quantum computing could potentially disrupt it. This is why diversification is key for retirement portfolios. Don't put all your eggs in one basket. The bottom line, realistically, Bitcoin isn't considered a guaranteed store of value yet, but some investors do choose to put a small portion of their portfolio into Bitcoin, alongside traditional assets like stocks, bonds, and gold. If you're thinking about adding Bitcoin to your retirement plan, you absolutely need to pay close attention to things like keeping your investment secure, having a solid diversification strategy, and actively managing your portfolio. Seriously, if you decide to invest in Bitcoin for retirement, make sure you regularly check how your portfolio is performing. Does it still match your retirement goals and how much risk you're comfortable with? Also, after big market swings, you'll likely need to rebalance your assets. Basically, adjust things back to your desired mix. This helps manage risk, lock in potential profits, and prevents you from being too exposed to super volatile assets like Bitcoin. What do you think? Write your comment below of this video.